Well, good morning, everyone, and welcome to our last day of our special coverage from the World Economic Forum. I'm Francine Lacqua here live in Davos. Now, here's what's coming up on today's program. Tech back in the driver's seat after TSMC's outlook drove a 160 billion global rally in chip stocks. Now, UK recession risks grow as retail sales plummet in December, falling the most in 3 years. Traders add to bets on BOE rate cuts. Plus, it's the final day of the World Economic Forum. We'll also be joined this hour by the Saudi finance minister. Also, don't miss a discussion that I'll be hosting on the global economic outlook. Panelists include the ECB president Christine Lagarde, the German finance minister Christian Lindner. We'll bring you that live on Bloomberg, and that's at 10 a.m. London time. But first, the frenzy over new anti-obesity drugs has seen Denmark's Novo Nordisk become the most valuable company in Europe. Novo Holdings is responsible for managing the assets of the Novo Nordisk Foundation, one of the largest enterprise foundations in the world. Now, it's also the controlling shareholder of Novo Nordisk. So I'm very pleased to be joined by Kasim Kutay, the chief executive of Novo Holdings. Thank you so much for making the time and braving the weather.
Pleasure, Franz. I know.
Wow, gosh, what a cold morning in Davos.
Pleasure to be with you.
With your money tank, I guess, bigger than ever, will you be even more active, or will you be active, full stop, in 2024 in buying companies and doing M&A?
Absolutely. So we will continue to scale our activities because, as you said, we obviously have significant dividends coming from our operating companies. We have two operating companies, Novo Nordisk and Novozymes, so we need to scale up and put that money to good work on behalf and for the benefit of the foundation and the great work that they do. So we expect to be busier than ever, and indeed are looking to potentially open one new office this year as well, so taking our total to 7 offices.
So offices, but also M&A? Is there a company that you'd be looking to acquire to make the fit better?
Yes, so we do M&A, particularly out of one of our teams that we call Principal Investments, which is within our life science division. And there we do a fair amount of buyout activity in the life science and healthcare sector. I can't go into too much detail, but we did a couple of them last year, and we anticipate doing a fair amount more in 2024, and indeed going forward, because the cash flows that are coming our way are going to be obviously quite significant if you look at the forecasts in terms of how the GLP-1 class is going to be doing in the coming years.
So a fair amount more. I mean, do you have actually an idea of how much you want to spend and what regions you want to target?
Sure. So we actually just put in place our new strategy. We call it Strategy 2030. That's going to take us through to 2030, and essentially it reconfirms our asset allocation today. And at a broad level, if you look at our investment portfolio, 50% of that is going to be allocated to life sciences, 50% will be capital investments, which is our non-life science activities. We will, roughly speaking, maintain that allocation. Asia is fairly new for us. We opened Singapore 3 years ago. I expect we're going to open another Asia office in 24, and we see a fair amount of scaling that's going to take place there across our life science activities. And
what are you most excited about? I mean, would this be, for example, to target other companies that deal with obesity, or do you feel like you have that covered?
No. So we're not a strategic investor. We don't invest on behalf of Novo Nordisk. Our mandate is to generate attractive long-term returns on the assets of the Novo Nordisk Foundation, obviously for the benefit of people and society. So we are not a strategic investor. We are a return-focused and based investor, and indeed we try and avoid the areas that Novo Nordisk focuses on. So we're not investing in diabetes and obesity as such, but we think about it more in terms of our divisions and our groups. So we've got a venture team doing biotech ventures, and we see a lot of activity there. We actually had a very active year because we found valuations very attractive. As you know, the biotech sector took a bit of a hammering starting in about late 21, so we found 23 an very interesting time to take advantage of that. Then we have a growth equity team, and then we have the principal investment team, which is our buyout team. But growth equity, in terms of Asia, is a very exciting place, and that's where we're deploying a lot of capital.
Even in terms of valuations?
Even in terms of valuations, actually, yes. I mean, I think we have seen some interesting opportunities. Obviously, India is a bit of an exception to that. Valuations are, yes, I mean, we all know where the multiples are. But actually, you know, when, across the rest of Asia, we see some very interesting opportunities. But despite the valuations in India, we have been very actively investing.
I mean, India has high valuations maybe for a reason. Correct. Right? Or is there a place for India to almost rival China now that geopolitics is changing, you know, really the I guess, trade wars between the US and China?
Yeah, I mean, you know, it depends what you mean by rivalry, but certainly India is becoming a very important destination for the reshoring that's taking place. But, you know, we don't think about it in terms of rivalry. We think about it in terms of the healthcare opportunity. And whether it be China or whether it be India, if you look at the healthcare needs of those societies, they're significant. And that's exactly what we're investing against. And
again, if you look, for example, also at insurance in India, this is something, health insurance, it's not something that's, you know, it's something that we're really just at the cusp of that.
Absolutely. So I'd even go broader. I would say universal healthcare coverage across Asia, including India. I mean, that's clearly, as these societies develop, as the middle class grows, it's an inevitability. It's a question of time. We're beginning to see the beginnings of broader healthcare coverage, but several of those nations have ambitions to have universal healthcare coverage in place. So that, plus the combination of the burgeoning healthcare insurance industry in those markets, it's exact. I'm glad you mentioned that, because those are exactly the sort of themes that make us excited about the region and why we're investing so actively there.
And this is really, is it like a 2024 a game changer in terms of actually making sure that the trend is there? Does it depend on growth, I imagine, right? But also the mentality of politicians there and what the citizens want.
Yes, I mean, I don't know if 2024 is necessarily a game changer. I think these trends have been working themselves for a while, but certainly we see an acceleration of these trends. But 22, 23 were all very exciting years for us in that region. And aside from Asia, of course, we will be scaling some other of our activities as well.
Were you surprised at how much, of course, you know, the obesity treatments really captured, well, valuation, captured the imagination of everyone? Because it seems that every single life science biotech company now wants to be in that space.
Yes, no, obviously, you know, Novo Nordisk has really blazed a trail in terms of obesity treatment. And I think the scientific data, particularly around semaglutide, if you look at things like the SELECT trial data, all really talk to the comorbidities. I mean, that's the important thing that we need to be focused on. This is not just about obesity, it's about all the comorbidities around obesity, whether it be cardiovascular diseases, kidney diseases, hypertension, etc. And I think the scientific data today clearly supports the trend and the need to treat obesity in order to treat a lot of other conditions, and that in turn speaks to preventive healthcare and medicine, which I think is something that is critical for our societies to be focused on.
So how much do you expect that market to continue growing in the coming years?
Look, I mean, I can't comment on specifics, and that's obviously for the company to comment on, but the forecasts are all out there in terms of analyst research, and you know, every time I open an analyst research report, the number is even higher. So I think as there's a broader appreciation, and as the scientific data and publications like the SELECT trial data from Novo Nordisk support the need to treat obesity in order to also treat these other comorbidities, that's going to be a very positive tailwind.
Now, we've had a number of fabulous conversations on inflation, because this, of course, is what is slightly obsessive for investors and monetary policy. If inflation comes down, and I don't know whether you think we've reached peak, does it make your life easier as an investor?
Yes, I mean, I think what makes our life easier as an investor is, more importantly, certainty. I mean, at the end of the day, whether, you know, inflation is at 2 or 2.5 or, you know, closer to 3, I think, you know, the world will adapt. But, you know, clearly, I think this is one of the things that's going to add to volatility in 2024, despite what I believe to be a very constructive, actually, economic backdrop, is the uncertainty about when will rates start to decline, by how much, and indeed what is the terminus where they will finally settle. And you put that along with the geopolitical issues that are before us, and I think 2024 will be a year where we need to fasten our seatbelts, so to speak.
Okay, thank you so much for your time today. Kasim Kutay there, the Chief Executive of Novo Holdings. Coming up, we'll also be speaking to Saudi Arabia's Finance Minister as concerns about stability heighten in the Middle East. That's next, and this is Bloomberg. Welcome back. Now, Saudi Arabia has expressed concern about Middle East security as the fallout from the Israel-Hamas war spreads across the region. To talk about that, to talk, of course, about finance across the region, I'm delighted to be joined by Saudi Arabia's Finance Minister, Mohammed Al-Jaddan. So for this interview, also, we welcome our Bloomberg Radio audience. We're cross-platform, Minister. Thank you so much for joining us. 2024 is going to be an interesting year. It could be a difficult year. What are your main concerns?
Well, I came to Davos with certain concerns. I think a lot of people here are concerned about the geopolitics, fragmentation. I think fragmentation is, at least to some extent, is under control, but still it is an issue for the world economy. I mean, as IMF said, it may actually shrink the world economy by 2.5 to 7% of the GDP, global GDP. So it's a serious concern.
Minister, when you look at some of the policies that Saudi Arabia will put in place this year, what will be your three top priorities?
Our top priorities is to double down on what we are doing in terms of reform and diversifying our economy. We do want to be distracted by what's happening. We do want to be derailed by what's happening. That said, we are also engaging heavily in our diplomatic machine to make sure that we de-escalate in the region, bring more wisdom, and try and find solutions to situations in the region.
I mean, what do you do with the price of oil right now? I know that one of the strategies was, of course, cutting production. That makes it harder against the balance of books. How do you go forward from this?
I'm not worried about that at all, actually. I mean, in 23, when we announced, a year ago, we announced the projection for the revenues. It was on the backdrop of $100 a barrel and a production of about 11 million barrels. We ended the year with 20% less on the price, 17% less on the production, but still our revenues came above what we projected. We are conservative in our projections, so we are managing it with that line.
Minister, I think in December you also said that some projects associated actually with Vision 2030 would be delayed. I don't know what that means January 2024. So what do you see a delay in? And does that mean that some will take priorities or will be sped up?
I think the game is efficiency and the game is economic value. So you want to make sure that every dollar that you spend, every real that you spend in the economy is not leaking, i.e. you don't need to import too much for your own development, but rather develop your own economy. That's number one, which is a key priority. Number two is overheating. Even if you have the capacity to spend, you do want to spend too much that will actually cause more inflation. So these two balances are very important in what we are doing, prioritizing what needs to be done now, what needs to be done by 26, what needs to be done by 2030, what can be extended to 35. This process is ongoing.
Can you update us on any changes in income tax for individuals in the kingdom?
There is no intention at all in Saudi Arabia to impose income tax on individuals. That has been our position very clearly. We mobilized local resources. We have VAT, we have income tax on corporates and foreign investors, and we have the zakat for the locals, and no intention of changing that. We are actually trying to rationalize some of the burden on the economy to make it even more business friendly.
Minister, can you also update us on any financing, actually, that Saudi Arabia will put in place, whether it's Eurobonds or other ways of issuance?
We were in the markets early in January. We issued what we wanted to issue in the first quarter. We announced our debt plan for the year just to be more predictable for the market. we will tap the markets as opportunities arise. I think it's very important. And obviously, market conditions will dictate when to go to the market and for how much. We need to manage our liabilities, not only for this year, but also for the years to come.
Yeah, and what you announced actually was a three-tranche $12 billion bond. So where will the financing of this go?
Well, we have a deficit of about 2% of GDP this year. So we need to finance our deficit, but also we need to accelerate some of the expenditure. We have logistical projects, logistics, whether it is railroads, ports, airports that we are building. We have significant water and water treatment plants that we wanted to expand because we wanted to make sure that services to our people is provided without interruption. And renewables. Obviously, we have a lot of renewable projects that we need to make sure that we have the financing for.
Minister, we're also about to do the Global Economic Outlook panel together. What are you most confident about in the world economy? 2023 could have been a very difficult year in terms of financing and cuts. We got through it. Is there not too much optimism about the world economy?
I think there is actually good signs that things are moving in the right direction, but still I think we need to do more. I think multilateral development institutions are reinventing themselves, which is actually very good. Low-income countries need a lot of support. They need growth. We are lacking growth, and we need to make sure that we find ways to help low-income countries find a path to growth.
And this would be through private partnerships or private-public partnerships? I mean, and actually, is there a danger that we're so distracted with all the crises that we forget actually also this underlying need?
I think we are distracted and possibly have the tendency to deal with the immediate issues, which need to be attended to, like inflation and others. But we also need to look at the medium term. We need to make sure that we actually work and implement policies that will actually help growth medium and long term. Otherwise, we will end up with sluggish growth.
And on the geopolitics, what concerns you about trade and supply chains changing? Do you see that as something that could last a long time, or is it just too soon to say?
I think fragmentation directly means inflation. And those who thought that they are going to hurt their opponents are realizing that it is also hurting themselves and their people and therefore their voters. And that is actually bringing an ease. I think there are a lot of initiatives that we see now between North and South, between China and the US, for example, which is easing tension and possibly limiting what is restricted, which is actually a good sign. However, we are seeing significant trade restrictions imposed in 22, for example. 3,000 restrictions were imposed into it compared to 19, about, I think, 3 times more than what was in 19. That is alarming, but I'm hopeful that we are going to see a more relaxed approach to the fragmentation that will help actually trade. Obviously, geopolitics impact trade, and we wanted to make sure that navigation routes are kept safe. Crews of ships going through the navigation routes are kept safe and not be harmed.
Minister, thank you so much for your time today. That was Mohammed Al-Jaddan, the Saudi Arabia's finance minister. And actually, we have to go together to this Global Economic Outlook panel. So with that, we'll be back top of the hour. We'll discuss this global economic outlook to wrap up the week here in Davos. Panels include the ECB President Christine Lagarde, the German Finance Minister Christian Lindner, and of course, the WTO Secretary General. The Pulse continues in just a few minutes, and this is Bloomberg.
Good morning. I'm Kriti Gupta in London, and this is The Pulse. The U.S. Congress has passed a temporary spending bill to avert a partial U.S. government shutdown this weekend. The legislation will be sent to the White House, where President Biden plans to sign it. The short-term package is meant to give lawmakers time to complete negotiations on annual funding for the fiscal year that began in October. And sticking with the states, the U.S. is preparing to introduce a plan to require banks tap the Fed's discount window at least once a year to ensure that lenders are ready for troubled times. Last year's regional banking crisis revealed that some weren't even set up operationally to quickly borrow from the facility. JP Morgan has raised CEO Jamie Dimon's pay to $36 million after reported the highest profit in the history of American banking. His total pay is up 4.3% from 2022 with a $1.5 million salary and the rest coming as performance-based incentives. JP Morgan revenue last year was just short of $50 billion. And from the banking space to the tech space, the EU antitrust regulator is expected to block Amazon's proposed $1.4 billion acquisition of Roomba maker iRobot. According to a Bloomberg source, the e-commerce giant was told yesterday that the deal would likely be rejected. A final decision by EU leaders is due by February 14th, with the deal also likely to face opposition in the United States. Now, coming up on the program, shipping costs soar as Houthi attacks in the Red Sea threaten to cripple global trade. We're going to take a closer look at the events unfolding in the Middle East next. Stick with us. This is Bloomberg. Tech back in the driver's seat after TSMC's outlook drove a $165 billion global rally in chip stocks. Meanwhile, in the UK, recession risks grow as retail sales plummet in December, falling the most in 3 years. Traders adding to bets on a dovish BOE. Plus, it's the final day of the World Economic Forum. Stay tuned for a discussion on the global economic outlook featuring ECB President Christine Lagarde and German Finance Minister Christian Lindner, live at 10 a.m. London time. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. Francine Lacqua is on location. A quick check on these markets here because, look, you are seeing a really interesting dynamic when you look at the stock 600 in particular. You are seeing green on the screen across the continent, higher by 0.4%. The FTSE 100 outperforming those 0.7% there. Even across the Atlantic, futures seeing a massive bid. This is really just the read-through, the ripple effect of the massive tech rally you saw in the U.S. session yesterday. You saw it in the Asian session, you are seeing it in the European session, and it's feeding right back into the U.S. session. Does that create some selling later in the European trade, though? That's going to be the question. Monetary policy also top of mind, which brings us to the cross-asset story. If you look at this yield picture, you're seeing a sustainable move about 4%, 4.13 on the 10-year yield at the moment, and it is staying there. A lot of those rate cut bets not showing up in the surface, and a lot of it has to do about geopolitical concerns, but also inflationary concerns as well. We'll dive into it in the hours to come. Plus, the currency pictures where the dislocations are really coming back down to earth. Euro-dollar 108, cable at about 127, and Brent crude marginal moves there despite some of the geopolitical tensions, higher by 0.4%, been trading at a 79 handle. I want to dive in a little bit more to those geopolitical tensions in the Middle East and talk about a week that has been gripped by volatility and tension. I brought in two experts to help me dissect it all. Rosalind Matheson, Bloomberg's news director for the EMEA region, joins me right here on set, plus Mark Champion, who covers international affairs for Bloomberg Opinion. We thank you both for so much for joining. Roz, I'm going to start with you here when we talk about kind of what's gone on this week. President Joe Biden made some pretty controversial comments in the last 24 hours saying that the effectiveness of the U.S. and U.K. airstrikes on Yemen, well, they may actually not be as effective. Is that going to change their course of action? He says no. What do you initially make of that strategy?
Well, it's really just acknowledging the reality that for the US, they're kind of stuck because they are been doing these airstrikes on the Houthi targets in Yemen. Even so, the Houthis are still striking ships in the Red Sea, not damaging them severely, but enough to cause that continued disruption, forcing ships to go the long way round and really making life very difficult for shipping in the area. So for all these airstrikes, nothing really is changing, and real questions about how much, if at all, the US has degraded the Houthi ability on the ground. So Joe Biden was really acknowledging reality when it comes to that. The question, as you say, is what else can the US do or should they do here? Do they really want to end up with troops on the ground inside Yemen? Probably not. Not an election year for sure either way. And would that achieve anything in itself? And so what can the US do? More strikes on Yemen. Hopefully the Houthis at some point decide that they want to stop doing what they're doing. But really, there's no great answer here for the US in all of it.
You know, it's really interesting because it also comes at a time when the United States, under President Biden's direction, has removed the terrorist, or added, I should say, the terrorist organization status back to the Houthi rebels, which President Biden himself had actually initially taken away in 2021. one for humanitarian aid, given that Yemen is still dealing with the civil war crisis there. Mark, I want to bring you in to this story because, as Roz put it, there is a big question about what the United States' role here is. And in the last 24 hours, when you look at these Houthi strikes, they've actively targeted U.S. commercial vessels, despite previously saying they're only targeting vessels headed to Israel. Is there a question here about effectiveness and credibility when it comes to the American military right now?
Well, I mean, the U.S. went in without question. They knew that it would be very difficult, if not impossible, for them to quickly stop the Houthis from attacking international shipping. They went in because they felt they had no other option, that they had to show that there's a red line, that the U.S. still is committed to preserving freedom of international navigation. This is not the only strait in the world that is of concern. Strait of Hormuz is even more important for energy, and there's always an issue there as to whether Iran, which occasionally threatens to do so, could shut that down. So this is a signaling exercise, but it does put the U.S. in a very difficult position. Really, the strategy for the U.S. to get this done is to dial down the war in Gaza, because the Houthis say that they began this in order to get to end the war in Gaza. The U.S. is trying to get the Israelis to dial that war down, but you had Prime Minister Benjamin Netanyahu in Washington yesterday saying that he's not going to stop until it's finished, and rejecting outright the U.S. plan for trying to sort of dial down tensions in the Middle East by saying that he's not interested in any kind of Palestinian state.
What does that then mean in terms of who's really behind all of this? At the core, you are seeing Iran really fight multiple proxy battles, whether it's with the Houthi rebels, whether it's with Hezbollah, or various other organizations within even Iraq and Syria as well. I'm curious about whether that multi-pronged approach is actually effective from the Iranian point of view.
Well, it appears to be. The Houthis are playing their role. They're clearly putting pressure on the international economy, putting pressure on the U.S. In Israel, you have Hamas. We don't know that the Iranians began this as a kind of careful plot, but what they are doing is taking they're opportunists, and they're taking the opportunity to put pressure on Israel, on the U.S. Through Hamas, through Hezbollah, through their militias in Syria, their proxies in Syria and Iraq. So that this is a kind of multi-pronged attack. That's how the Israelis certainly see it, and the Israelis. It's one reason why the Israelis are being so intransigent.
Roz, I want to bring you back in here because as we talk about how the West perhaps deals with these constant threats from Iran and their proxies, there's been a lot of rhetoric around adding even more sanctions, pressuring even more oil revenues. Is that realistic right now?
Well, in this environment, it's sort of interesting to see what, if anything, that would achieve. I mean, you talked about also Joe Biden reinstituting the terrorist designation on the Houthis, perhaps to try and cut off some of their financing. But in the end, really, tangibly, what is that going to achieve in the short term, if anything? And so there's lots of talk about penalties and using economic pressure to force nations and groups to change course. But history shows us that's often a tricky calculation to take. And do the results actually deliver what you're seeking at the time? I mean, look at the amount of sanctions on Russia over its invasion of Ukraine, for example. Those were designed to squeeze the Russian economy, to squeeze Vladimir Putin, to make him change course in Ukraine. And we're coming up, to the war's about to enter its third year. And certainly it's not stopped him. He's cranked up a war economy in Russia instead. And Ukraine is struggling on the ground with its conflict. And so these questions of sort of using, oil and so on as a weapon weapon against Iran. I mean, Iran always wants to be able to ship more oil. It's certainly one thing that's important to it. But is it going to deter Iran with these proxies at this point? It's hard to see how.
And it really adds up the pressure that this needs to be a conversation and a crisis that needs to be wrapped up even more quickly, despite the regional escalation you're already seeing. Mark, I want to bring you back in for the final word here, because just in this last week, Arab nations, a lot of Gulf states in particular, have said they together are going to be leading perhaps the brokering of some sort of peace plan to end the conflict between Israel and Hamas at the moment. What is the reality of that? Do you think that's achievable?
I think it's going to be very difficult because the sine qua non that they say is required for them to get involved, significantly and really play a big role, is that the Israelis should accept that they're, sort of restart the process, the talks leading towards a Palestinian state, a two-state solution, with the Israelis at the moment just ruling that out. And saying that they intend to maintain control all the way from the border with Jordan to the sea. That's what Netanyahu said yesterday. It's hard to see how you get those two kind of sides to meet.
And it's something, it's a kind of a hard line that they've been sticking to, I want to say, for decades to come, and yet really reinforcing that narrative now. Mark Champion, Rosalind Matheson, we have to leave it there. We thank you so much for putting this week's event into context. Of course, Rosalind Matheson, Bloomberg News' EMEA Director of News, and Mark Champion covering international affairs for Bloomberg Opinion. Coming up on the program, we go from the Middle East to right back here in the UK. We're going to hear from the UK's Chancellor of the Exchequer on tax cuts, Google, and this year's looming general election. That conversation next. This is Bloomberg. UK Chancellor Jeremy Hunt says he wants to make Britain more competitive. He spoke to Bloomberg's Francine Lacqua at the World Economic Forum in Davos.
Well, I think when investors look around the world at the instability in other countries, the rise of populist far-right parties in many parts of Europe, they say that even with elections, which is right we have because we're a democracy, the UK is actually a very stable long-term bet. And what they're also seeing is something they haven't seen before, which is that the technology sector is now so vibrant in the UK that they can't really afford not to be there.
Will you tell actually investors that we'll see a corporation tax cut?
Well, they've already seen a huge corporation tax cut because in the autumn statement I introduced full expensing of capital allowances, which means for investors investing capital, they get a 25% discount off their corporation tax bill, which is more attractive than any other major country. So we will continue to do everything we can to get the tax burden down. And that is, a choice we have as a country because other parties would increase the tax burden, they'd increase borrowing. We think the way we grow the economy is by reducing taxes, making them more competitive.
But will that happen in the next budget statement? And is that going to be the last financial event before the election?
Well, Fran, it's early days for the budget. It's on March the 6th. I haven't seen the final figures from the Office for Budget Responsibility, so I don't know the headroom that I'm going to have to play with. But what I can tell you is what I want to do, because I look around the world and I see that North America, Asia, where generally countries have lower taxes than Europe, they're growing faster. In Europe, where our taxes tend to be higher, we're growing more slowly. So if I can, I want to reduce the tax burden and make the UK more competitive, more dynamic, more vibrant.
Will you deliver an autumn statement, or will we have an election before then?
Well, the timing of the election, I wish I could tell you, and it's not that I'm hiding, I just don't know. This is a decision for the Prime Minister. What I have to do as Chancellor is make sure that I set the economy on the right track, because the main reason people vote Conservative is because they trust us with the economy, and they can look at Rishi Sunak's record, my record. They can see we brought inflation down from 11.1% to 4%. So far we've avoided a recession, even though many people predicted we'd get one, and they can see tremendous prospects for the future.
UK Chancellor Jeremy Hunt there speaking to Bloomberg's Francine Lacqua at the World Economic Forum in Davos, Switzerland. I want to get a little bit more context on some of what they were talking about. Dan Hansen from our Bloomberg Economics team joins me right here on the set. Dan, they were talking a little bit about this fiscal budget and whether or not tax cuts are really reasonable or on the agenda. Certainly desirable by members of government, but also for the likes of you and me. We all love a little extra money in our pockets. But how realistic is that? Can they afford to do that?
I think they probably can, to be honest. So if you go back to the autumn statement, he had about, and we call it headroom here in the UK, which is the space he has against his fiscal target. So he had about £13 billion of headroom. But since then, we've had this big fall in interest rates, in gilt yields, and a few other moving parts. But I think his headroom could possibly double. So he could have close to £30 billion to spend. Now, just to put it into context, an income tax cut, 1p on the basic rate of income tax here in the UK, which is 20%, would cost him about £7 billion. It's probably going to keep fuel duty frozen again. And I think, so to answer your question directly, yes, I think there is a fiscal boost coming, and he'll probably have the headroom to do that, mainly driven by this fall in interest rates we've had, which is going to benefit the public finances.
But are there other expenses that aren't being accounted for here? And specifically in the context of geopolitics, for example, we've heard Rishi Sunak, for example, US and the UK talking about these airstrikes in Yemen. I imagine that's going to cost the UK a little extra money. And we've heard Rishi Sunak talk about the defense budget in this country in particular. Is that accounted for?
It will be accounted for, but I think what's really interesting about the fiscal strategy of this government, at least, is to, as we sort of answered in the first question, is put so much emphasis on tax cuts in order to bring borrowing down, which is what you've heard the Chancellor say there, to bring debt down and bring it back to more sustainable levels. That means an enormous squeeze on public spending. So I think the question when we see the budget, when we potentially see these new tax cuts, is to ask, is it really realistic to expect spending to be squeezed that hard when we've had such a long period of austerity in the UK between 2010 and 2019. So there is always going to be this question hanging around sort of long-term sustainability of the public finances the more you go and cut these taxes.
So we talked a little bit about the fiscal policy. Let's talk about the monetary policy as well. Just in the last 24 hours, a lot of bets being added on the BOE to be even more dovish than they were expected to before. How many rate cuts do you think is accurate for the BOE in 2024?
Yeah, so we've had a bit of a roller coaster, haven't we? So we had CPI on Wednesday, which saw bets being paired quite significantly. I think 25 basis points was taken out of the curve for 2024. So we went from about 130 for the year down to 100. We're now back, I think, around about 120, a little bit less maybe. Our view is that there'll be 5 this year, 25 basis points. So that's 25 basis point cuts. That's probably on the aggressive side for economist consensus, at least the economist consensus. But I think the thing to sort of remember here is that there's pretty strong evidence, at least we think, that inflation will be around 2% come the spring. That opens the door to the bank to think about cutting rates. And when it does start cutting rates, our view is they'll probably go at one a meeting instead of one a quarter. Seems quite strange to cut, miss a meeting, cut again. So I think for us, at least, we're penciling 125 at the moment, so 5 for next year, 5 for this year. All
right. So the call there from Bloomberg Economics, Dan Hansen joining me to talk a little bit about the money issues of the UK. We go from the finances of the United Kingdom to the finances of Germany. German budget lawmakers have approved the federal government's delayed finance plan for 2024, which restores a constitutional limit on net new borrowing for the first time since 2019. Joining me now, Bloomberg's Oliver Crook is all over the story. Ollie, is it over yet?
Well, almost, but not quite. And what the it is also the question here. So basically, they've got this through the Budget Committee. It now needs to go to Parliament in order to get fully ratified. That'll happen in the beginning of February. So what we got overnight was the net new borrowing figure that is close to 40 billion euros. And of course, this is the sort of big debate here within Germany because there is not enough money to go around anymore. And so, for example, one of the things they're setting up is a raw material fund for €1 billion. That money has to come from somewhere. And part of the places it's come from has caused some of the political problem that we've seen in Germany over the last week. We've seen those farmer protests all across Germany. It all crescendoed on Monday with more than 5,000 tractors, 10,000 people in the street. We've had the train workers also striking. You also have the truckers that are doing a protest today here in Germany. So again, all of this stuff is where the rubber hits the road, where you need to make the exchange and the balance of really retooling this economy for the future.
So talk to us then a little bit about any optimism here. Ollie, we're in the news business. We need some good news every now and then. Talk to us about if there's any reason to be positive.
Listen, Kriti, I was looking for good news in the economic data, some of the surveys, but really overall, there isn't a huge amount of it. We got the data out this week that the German economy contracted last year. It's not looking really very much better this year. The question is, how do you solve that problem here in Germany when you are cash strapped? So we asked that to Christian Lindner, the finance minister over in Davos, what his recipe is for success in the German economy is, and he basically really favors supply side reform. He's a libertarian economically. That means a more flexible labor market, a labor market which is missing people, lower taxes. We now have higher taxes due to this sort of a budget situation. And then the other thing that he would really like is the sort of white whale of German economic reform, which is cutting red tape and bureaucracy. But in the absence of being able to do those things, there's another issue this government needs to deal with, and that is they rise politically on the far right. And we asked Christian Lindner about that.
They have very easy answers for very complicated challenges. Think about the Brexit. And the situation is similar in Germany. Our right-wing populists, they suggest Germany would benefit from exiting the European Union, but the single market is of paramount importance for our economy.
So really the task for the government is convincing the people to kind of stay along with them as they make these really difficult reforms among a really dimming economic outlook. You may get a contraction. Germany is going to be the slowest growing nation of the G20 except for Argentina this year. So while the outlook may not be clear, one thing is for sure, it's going to be tough economically and it's going to be tough politically.
Certainly something we're going to be keeping a very close eye on. Bloomberg's Oliver Cook reporting for us from Berlin. We thank you as always. Coming up on the program, the CEO of Morgan Stanley gives us his outlook for Fed rate cuts as this year's World Economic Forum in Davos begins to wrap up for another year. That conversation next. This is Bloomberg. Morgan Stanley CEO says the drought in mergers and acquisitions should ease once the Federal Reserve begins to lower borrowing costs with some level of predictability. Ted Pick speaking to Bloomberg in Davos.
I think the path is probably that inflation is past. They're going to start lowering at some point when they're ready. They're going to be prudent. They're going to be thoughtful. And that kind of predictability is very good for the core investment banking business.
Morgan Stanley CEO Ted Pick there speaking to Bloomberg in Davos. He's not the only one who joined us. Blackstone CEO Steve Schwartzman saying he's optimistic that animal spirits are returning to markets on hopes that the Fed will also be slashing interest rates this year. Speaking in Davos, he told us the pace of private equity investments is picking up at the world's biggest alternative asset manager.
The economy is slowing a bit. That's normal with high interest rates. So on the other side of the ledger, the expectation that interest rates are going down is creating animal spirits again.
Blackstone CEO Steve Schwartzman there. You've heard from some of the major kind of market players. You're also about to hear from some of the major monetary and fiscal policy players as well. Coming up next, a discussion on the global economic outlook. Panelists including ECB President Christine Lagarde and German Finance Minister Christian Lindner. That panel hosted by our very own Francine Lacqua in just a few minutes' time. Stick with us. This is Bloomberg.